Well, so how will that bubble burst play out? Because you're right. You've been talking about bubbles since, for a decade now, and we keep kicking the can down the road. And we had a mini pop during COVID, everything crashed, but now we're at record highs again. So when this bubble finally bursts, what does that look like? Because essentially you're saying it won't be necessarily the stock market crashing, it's just going to be the debasement of the dollar, and will foreign entities just finally say, "Hey, we don't want the dollar?"
Well, the last two bubbles popped because the Fed tried to normalize rates. And, and when they did, they basically took away the punch bowl and everybody was hung over. And then all the mistakes were obvious. So this time around, I think the one thing that the Fed has learned from the past is you never do that. You can talk about normalizing rates, but you never actually do it. They don't want to take the punch bowl away. They don't want anybody to sober up, because then they'll see what a disaster the Fed has created. So this bubble is not going to burst because the Fed raises rates. It's going to burst because it doesn't raise rates. It's going to burst because the dollar crashes, because inflation runs out of control, ultimately either forcing the Fed to raise rates much higher and much faster than anybody would have imagined, or they don't raise them at all, and we have hyperinflation, and the dollar becomes practically worthless. But this is going to be much worse and end much differently, I believe, than either of those prior to bubbles.
Well, so inflation is obviously in the headlines now, but it seems like the media and government officials are saying, hey, it's not a big deal, or it's transitory. It's actually lower than we expected. What are your thoughts on inflation, and what should Americans know?
Yeah, well, it's a tax. And it's the way most Americans are going to have to pay for big government and all the new government programs that the Biden administration is advocating and that are working their way through Congress now. Infrastructure, whatever this new deal that they're coming up with, everybody's going to get free pre-K, free nursery school, free community college, free family medical leave. People on Medicare are going to get more benefits, more dental, more vision, whatever it is. All this money, we're already broke, and we're doling out all this new money we don't have, and so it's all going to be printed, and so that's going to destroy the value of the wages and the savings that Americans have. And so that amounts to a tax. But what the government is doing now with inflation is exactly what I predicted they would do, because first they deny that there's inflation, and they did that for a long time. Then they say, okay, we have inflation, but that's a good thing because this is what we need. We didn't have enough inflation, so thank God we've got inflation. Then they start saying, well, okay, it's a little higher than we really want, but don't worry, it's just transitory. And initially, transitory means temporary, like, oh, the price hikes won't stick, right? After we get back to normal, prices will go back down to normal. Then they change the definition of transitory to mean permanent, meaning that, well, what's transitory are not the price hikes, they're permanent. What's transitory is how much longer they're going to be going up at this pace, which they don't even know. So they keep changing their tune and moving the bar, but they're still pretending that if inflation ever really became a problem, even though it already is a huge problem, but they're claiming if it ever became a problem, well, they have the tools to fix it, right? Which maybe they do, but they would never actually use them, because if the Fed was willing to use its tools, it would have already used them. The reason it's not is because it can't, and so it won't. And eventually, what I think the Fed is going to come out and say is, you know what? Inflation is a lot more than 2%, whatever it is, 4%, 5%, 6%. But you know what? Get used to it, because it's going to be with us for a long time, and it's okay because it's better than the alternative. It's the price we pay for prosperity. It's the price we pay for a strong labor market and income inequality and a Green New Deal. And whatever it is, they're just going to say we have to accept high inflation as, a fact of life. That's what's ultimately coming.
I love what you've said before about how America used to be the world's biggest creditor. Now it's the world's biggest debtor, and we're getting poorer, and our standard of living is decreasing. But at the same time, we don't look like we're living poor, because we're basically borrowing to purchase other countries' products, right? And so it seems like we're able to kick the can down the road in that sense, because everyone is on the US dollar. That's the global reserve currency. But how do you predict that actually changes? I mean, playing out.
Well, the reason the dollar became the reserve currency was because everybody needed dollars to buy our products. We made all the television sets. We made all the radios, all the sewing machines, most of the cars, that we made everything in America. We were the manufacturing center of the entire world when the dollar became the reserve currency. Also, the US had most of the world's gold. Right? Where did we get all that gold? Well, we earned it all with huge trade surpluses. How did America become the world's wealthiest creditor nation? We had such large trade surpluses. We earned all this money, and then we invested that money by buying assets in other countries. So the rest of the world was buying our goods that we made, and then we bought up their assets. We bought their stocks. We bought their bonds. We bought their real estate. That's what rich countries do. They accumulate assets. What poor countries do is they go into debt to consume. They accumulate liabilities. That's what America is doing. America is the mirror image of the country that was bestowed the privilege of issuing the reserve currency. Nobody would pick America today based on the characteristics of the world's biggest trade deficits, the world's biggest budget deficits, and the world's biggest debtor nation, where we owe more money than all the other debtor nations of the world combined. America borrows from the poorest nations on earth. So eventually the world is going to wake up to the reality that they don't need dollars, because they don't need to buy what we make, because we don't make the stuff anymore. They make the stuff. We need their currency. They don't need our dollars. And so it's very close to a point where the dollar is going to implode. And I think that's going to be when the world realizes that the Fed has no control over inflation. The markets, everyone around the world still thinks that the Fed has got this under control and that the Fed is going to raise rates and shrink its balance sheet. That's why every time you see hotter than expected inflation numbers like we got today, we got 1% increase in producer prices, much bigger than the gain that was expected. It matched the 1% from last month. We now have producer prices up 6.4% in 7 months. Mm-hmm. So if this pace keeps up for the rest of the year, that's an 11% increase. We've never seen producer prices up that much in 1 year, and so this is record increases. Consumers are going to be feeling this as well. They're already feeling it. But the reason that the gold price sold off after these high inflation numbers came out is because everybody expects the Fed to do something about it. Oh, the Fed is going to have to get aggressive. The Fed is going to have to fight to put this inflation genie back in the bottle. Well, when the world recognizes that that fight is never going to happen, because if the Fed tried to fight inflation, it would lose. Inflation would win, so it's not even going to get in a ring and embarrass itself. But when the world realizes it, that's when the bottom is going to drop out of the dollar. Because if we're going to have 5%, 6%, 10% inflation every year forever, mm-hmm. why would you hold on to a dollar that's losing 5 to 10% of its value every right. single year if the only interest that you're getting on it to offset that is 1%?
Right.
So, everybody's going to rush for the exits. And of course, there's no way that everybody can get out because somebody has to buy.